Alrighty, traders, what's going on? First month of 2025 is down. Filming this on February 4th. January is over, and it's the best January of my career by far. I think the now second best would either be 2023 of 280, or it might be 2021 of 267. So 280 just beats the cake. Or beats the cake, I don't even know what I'm saying. But certainly 392 is the new record, just under 400. And honestly, when I think about this month, there wasn't anything, extraordinary about this month. And I don't mean to downplay the profits I made. They're incredible. It's an incredible start to the year. But I feel like if I could guess, when another trader would see that kind of month I'm having, they might think like, oh my gosh, what is he doing? What special strategy does he have? Like, what edge is he doing? And it's the same thing. I've just have taken a much more serious approach going into 2025 that I've talked about certainly on a video that we posted on Clover, and I've certainly talked about this in webinars for 4-leaf clovers. I'm just approaching 2025 with a much more serious and committed approach to sizing up very seriously. And I hadn't done that in quite some time. I kind of coasted on a risk level I was fine and okay with. But just November, December, and then really starting into this year, I have really committed to just wanting to be bigger, wanting to risk more and make more. And so a lot of these trades you'll see here are from a few tickers, but really it's because I've gone from maybe risking 5 or 6K in a trade to then willing to risk 10 to 15K in the trade, and the risk reward is the same. And if I make 2 or 3 to 1, all of a sudden I'm making 50K on what I deem to be, slightly above average trade. And 50K becomes now, almost like not an average gain, but it's certainly starting to feel like it. And so I know the average gain is 10K and the average loss is 5K. But again, the average is always skewed because most of my losses, if I took a full size loss, it was really actually closer to 8 or 9K. And again, you'll notice some winners here are some of the smaller winners throughout this month, which I actually really don't go over because they're kind of scratches. I don't really learn much from them. But they bring the average down because really the trades that brought me to this total were always in the 20, 30, 40, 50K range. And so without further ado, let's go into it. The one last thing I want to talk about before I start the trades is that you'll notice the win rate's 83%. That is insanely high for me. That is well over 20% higher than what my career average is. And I will attest to that like I only took 9 losers this month, which is insanely low. Normally I'm taking at least 15, 20 plus. So that helped a lot too. I would imagine if I took the amount of average losers or the number of losers, this probably would have been more towards like 300. So still an incredible month nonetheless, but like the so few and far between losers obviously did help this tremendously. So without further ado, let's jump right in. Week number 1, which was, 2 days to start off the first week of January. First small gain or smallish gain. But I want to just bring this one up because this made me feel rusty. For those who were in the trading in the 2020 and 2021 market where OTCs went nuts, QNCCF here is one that kind of was a blast from the past, one that, runs up 1, 2, 3, 4, 5, 6, 7, practically 8 days in a row. And I forget if there was news out or something happened, but I mean, this just got clobbered. It just got obliterated from 170s down to the 60s. And so it offered a very, very good panic dip buy. I don't think we could show it, so let me just pull up. Well, I can, but not on the monthly chart. Let me pull up through the daily or the intraday. So yeah, I mean, out of nowhere, this panic just in what looks like about 10 candles goes from practically 150 to 60. So a massive, massive panic. And again, this is a kind of panic where I actually started getting interested for a bounce play. Now, you'll notice there was a small green candle where the biggest volume got put in. Typically, that is a sign of a bottom or a bottoming, but it's not always foolproof. And so I did buy some there, but then did take a loss because it went lower. And then quickly after just a couple more minutes of selling, the real bottom came and the bounce really started. And so I did take a loss and then recoup back my losses. However, I call it being rusty because I sold, I think my best was selling like at 90 cents. Went all the way to almost 110, so quite early on the sells. If we look at here, yeah, this is the screenshot of just like the E-Trade transactions I had. So like I said, bought once, stopped out when it had that little green candle, and then went lower to low day. Got in right before that pop, right? If you look at better on here when we zoom in, right before this pop that actually got the real bounce to start. And then, like I said, sold way too early well before the real speed up of the bounce happened. And so only locked in about like 2 to 3K on the long, which again, sounds good. But again, considering, I mean, gosh, if I was not as rusty on this, if these were still happening frequently, I will say there is a little bit of scalability problem because it does get difficult if you're too big of size when in terms of cutting the losses. But, there were plenty of 5, 10, 15K dip buy winners back in 2021. So a little bit rusty on the sizing and on the patience. But then once the bounces got too much or too overdone too soon, we now bounce from 66 all the way to 108, almost 110 area. That's when I did decide to get short and to get for a pullback. So I did start in short. Again, I also didn't do much size because I thought there was a chance this could bounce to 110, 115, 120, maybe in an extreme case get up to this red-green level. So I did leave some room to add. Of course, it didn't get there, and so shorted at like a 105, 106 average. And then similarly here, did cover a little bit early. Wasn't really looking for the bottom, but when we went to like the 90s, I said, okay, that's a pretty good move. I would not expect this to go back down to lower days, but turns out it actually did tap, I think, the high 70s. So left a little on the table, but again, locked another 3K there. So all in all, was up around 6K or so on the day just from this ticker alone. So that was a good start, and I just, I briefly mentioned not because of the gain per se, but because of, this is it. This is the panic and the dip buy. I shouldn't say the panic dip because I missed the panic on the short side, but early, call it 2017, 2018, 2019, like this was it. I would be short for this panic. I'd be covering and I'd be flipping the bounce, right? Maybe shorting the bounce if I was already PDT at the time, but certainly under the PDT, it was like, I'm in the panic, I'm dip buying it, and that's it for the week pretty much. So really cool to see that happen after so many years, especially since it really hasn't happened. This kind of move hasn't happened since like 2021. So it's been some time, which is cool to see. But other than that, TGL here, we're going to go over a couple of gap and craps this month, but again, they weren't, a huge part of my month. I had to guess, I haven't checked yet, but I would assume they're in the strong, healthy 5-figure range. So certainly a portion of it. But like I said, I had again 9 losers. I think about probably half of those were actually from gap and craps. So you could argue if I wanted to be, almost perfect with no red days and a massive win streak, a lot of losers were gap and craps, but again, gap and craps still were profitable, or still the reason I was profitable. And so actually we have to go into the intraday, the custom. What is today's? This is also the 3rd. But again, if you know how I trade gap and craps, especially if you're in the Clover room, it's the same old thing every day, just same process, different tickers, waiting for just a lower, some kind of break. And at first it looks like a chase, but then by the end of the day, when it really, really fades, which in this case TGL did, it looks really, really good. So if we just pull up the chart here, TGL shorted what I think was that first significant lower day put in, right? If we just zoom in more closely, right? Kind of tried to bounce, but none of these really bottoms convinced me just yet. Once we actually put in a bottom that held for at least a few minutes, then we finally cracked, and this was kind of I wouldn't call it a momentum shift in foresight, but hindsight, it looks like obviously it was. But again, like I said, got short on that lower day, chopped around for a little bit, an hour or two, and then really started to collapse by late day. And then by the close, it was down well over 50% off the opening price. So locked in like 8K there. So that was a cool one. Those were really only the main trades that I remember from, or really got something out of, I should say, from these 2 days. Because honestly, and I remember looking at these 2 days, there was no big particular gain on 24K and the 16K. It was like a bunch of 3, 4, 5, 6, 8K winners. There was nothing huge. There were just 3, 4 winners each day, and it led it up to a really good start to the year. So that was cool. Now, obviously, week 2 and week 3 were the real winners, and this is where the biggest gains of the months come from. And they're going to be, I think, 2 or 3 tickers in particular that really were the the massive portions. This one being the massive, or not the massivest, the biggest, Fannie Mae. Also OTC, but in a sense a little bit different because if you know Fannie Mae, this is Fannie Mae and Freddie Mac. This is like the largest mortgage-backed securities company. In America, arguably. And so even though they're on the OTC, they give you the characteristics of OTCs, why I love trading Fannie Mae. But again, it's not your typical scam, right? It's not some OTC turd that's going to go to zero in however many months or years, right? So for people who don't know Fannie Mae, I don't want to have you fooled that like, oh, it's an OTC, like it's a scam. It's why is it running? Like it's legit. This is one of the more legit companies on OTCs. I know it sounds crazy to say legit companies on OTCs, but there actually are plenty. I think it's like Volkswagen or Toyota, one of the two. It also trades on OTCs. So not all OTC stocks are scams, right? Certainly some foreign companies are on here as well. So anyways, why did this run start? And I think that's the biggest thing to note on this, why this, I think the catalyst really mattered here. Again, I'm not a huge fundamental trader, but because there was a fundamental driver behind it, I think allowed me to really profit on it well, both on the long side and the short side. And it really started back here, right? I didn't really make much money on this breakout here, but this breakout started because President Trump got elected, right? He won the election, and people were already longing in anticipation of the idea that he wants to take Fannie Mae out of conservatorship. Again, we've also made a more in-depth video lesson on, or not video lesson, but a YouTube video on this on the Clover channel, which I could probably link in the description, make it easy for you guys to find it. But I just talk about what I'm saying, which is Trump and the Trump administration want to exit Fannie Mae and Freddie Mac out of conservatorship. If that happens, they are going to be worth much more than where they're currently trading at today. Again, it's a big if. It's probably a multi-year if down the road. But nonetheless, he gets elected, it runs up. Pulls back, consolidates, people kind of forget about it. And then Bill Ackman puts out a tweet that he is also long with his hedge fund. In fact, I think he mentioned he had been long for almost a decade. I mean, he was long, if we go back from let's go 10 years back. He was probably accumulating all throughout this period, because I think he mentioned he only has a mid twos average. So really he was accumulating pretty early on, whereas if you were perfect, you could have got an average down to 50 cents. But nonetheless, he tweets about it, just talking about his thesis and why I think it's super likely, and that just gained a ton of attention to start this run. Now, I remember making a little bit of money on the tweet. I wasn't right there right away, but I did flip it overnight for a small gain. But with the real winners when they started coming was when this actual breakout over the mid threes happened. So the first one, I believe, and forgive me, there's going to be probably 5 to 7 trades on Fannie Mae here, but again, of the 390,000, if I remember correctly, I think it's well over half is Fannie Mae. So multiple different trades here. So the first breakout over 366 or 367 or whatever it was, if we have it here. Yeah, right at the open, it broke out, and I did buy my shares I had 2 E-Trade accounts at the time. So I have a Roth and then I have a regular brokerage account. Bought Fannie Mae in both those accounts right off the breakout. And so right away it works beautifully. And then it starts consolidating really well, above 4 in the low 4s. And I remember thinking to myself, why didn't I buy more? I knew how good this breakout would be, given the catalyst, given the reasoning behind it, given the fact that if you've even traded Fannie Mae enough times, like I have, every breakout usually has a very good chance of success. I remember buying this breakout and making money. I bought this out and made money. I bought this breakout and made money. I think I attempted to buy this breakout, and I think I lost money because it got choppy. But out of, I'm 4 for 5 now, or 3 for 4 on the breakouts here. So I already felt really good about it. And when I looked back at it consolidating midday, I just thought to myself, I was like, you should have bought more. But not only should I have bought more, I still thought to myself, hey, there's still a chance to buy more. So I didn't sell any of my E-Trade shares. And then I actually bought more in a more bigger account like my Centerpoint. Let's get rid of that one. I don't think that's here. Breakout sells. So yeah, unfortunately, I'm actually upset with myself that I didn't take a picture of here. But once it started getting and peaking over this 430 line, if I could just draw it right here, of course it dipped a little bit below, but once it kind of came back and held, it actually closed right at the highs of the day into the close, gapped up, sold into the morning spike into $5, and all in all, I also then sold the E-Trade shares. So you see those shares being sold there. Between both E-Trade accounts and the Centerpoint account, I locked in 53 grand. So very, very, very big winner on the breakout side. It's not every day or really ever I'm making that much money on the long side. Only who knows how much I would have made had I actually taken the breakout a little more serious in terms of sizing earlier on and actually taken more buying power from my Centerpoint account and used it to buy this. And the reason why you might be asking, why did you only buy with E-Trade and not Centerpoint, or why did you not have the size you wanted from E-Trade? Typically, again, I'm not the strongest long biased trader, and so my E-Trade accounts, which are mostly long biased, didn't have as much money in them, right? I'm trading with at least $500,000, if not close to $1 million short account or a short capital, whereas my long accounts are almost not even added up to in the 100, maybe 200K range max. So it wasn't nearly as much as I could have, should have, would have, hypothetically, but I'm glad I just recognized that, hey, this run isn't over. I then did buy the size I would have, should have, could have had earlier and sold it next day, still locking 50K. So still a very, very good breakout buy, and then it kind of failed. It wasn't any part of this pullback. It didn't seem all that predictable to me. I would have much rather had it closed up there and then did this the next morning. So when it did late day, I wasn't a part of this in any way, shape, or form. So Up next, before we go over more Fannie Mae, FFIE we'll get to, I want to talk about really quick the XTIA. This was a very cool ticker or trade that had just a ton of range. And I think some people would call this obviously a gap and crap. And granted, now it's not trading at $48 at the time. It was at 20 cents because they did a massive 200 for one reverse split. So now back at $5 or $4, but really it's probably less than a penny. Most people would probably call this a gap and crap, and I would agree with that. However, I think what made this really, really sweet is the fact that it already ran a day before, right? Most gap and craps, at least for how I like to trade them, is it's day one, right? It is the first day with news. This one was not day one. This one had an amazing gap up. I actually contemplated on taking this long overnight, not because I thought it was good, but because sometimes the crappiest of tickers just run really, really well. So if we go to the monthly, let's see if we can get it. Yeah, perfectly. Last day here. I remember contemplating it, but by the time I wanted to pull the trigger in after hours, it was just way too late. As you can see here, even before after hours, it just ramped into the close. And so I remember I think this 16 level was more 5 or 6 cents. And so by the time I got to the close, I was like, there's no way I chase this. But then even then, that wouldn't have technically been a chase in hindsight. And so went much higher from there. But again, for those of you who know who XTIA is as a company, without getting too deep in the fundamentals, I mean, they were in a very tough and bad situation, not only fundamentally, but just from a dilutive perspective. And so going into today, I knew, given how big the gap up was, given their situation, it was going to be incredibly difficult for them to hold their gains. And so that's why you see me pretty much getting pretty aggressively short out the open. I mean, even at the morning spike, I really had very little fear here. Of course, I had a risk level in mind. I thought this thing could have probably gotten at least a 25, maybe 30 if it got a little insane. But I thought once the momentum or the early strength out the open ended, this is going to get crushed. Now, it got crushed much more than I thought. I thought maybe it could get to this 10-cent range like I thought, which it did fairly early on. But the reason why I kept holding, and I actually held into after hours, was just kind of a little bit of luck. One was the fact that worked in my favor was that they announced they're doing a reverse split. And so that's what made it drop midday like this. And that in and of itself was good enough for me to hold it and give it a little more time because we've seen a lot of reverse splits happen recently on a lot of crappy tickers. And again, it's never really bullish or ever to do a reverse split. And I think the market sentiment really has rewarded that in a sense for short selling. So, and not necessarily rewarded short sellers, but just has punished longs. That's probably a better way to put it because there's really no positives that come out of it. And so when we closed at 10 cents or 11 cents here, I thought to myself, let me just give it some time, given the fact that I've seen some of these fade really, really well after reverse splits. And lo and behold, I just got lucky that the very minute into the close, they did an offering. So what turned out to be something I wanted to fade maybe towards 10 cents or 8 or 9 cents down here, it actually went below red green and actually got crushed down to 8 cents, 7 cents, and then 6 cents, where I covered the rest for a 24 grand trade. So really good. Again, not the biggest gain you're going to see from me this month, but I'm just really stoked about it because you got to remember also with such a low price 20-cent ticker, the 250 rule played a role. Had it not, I could have had much more dollar size on the actual trade, but given that I have to take my share size times 250 and takes a lot of buying power away, I didn't have nearly as much as I maybe could have. But again, to make that kind of a gain on such big range of a small price ticker was definitely one of my favorite trades from this month. So that was really, really cool. Now, next one is FFIE. We've talked about this ticker plenty from my biggest loss back in May. Certainly talked about, I think, quite a bit from the swing trading ideas I had on it, especially, into this move and then into the fade back down to the 2s and 1s. Now, eventually, I think it was this day. I think it was my November recap. I talked about how I covered finally when it made a new weekly high. You can't see it because it's only a daily chart here, but that was a new weekly high technically, and so I covered. Went a little bit lower and actually supported a 1 pretty well, and it has not gone lower since. And again, regardless that I covered it at 150 and then missed out on the downside, that doesn't matter to me because I knew it was a high likely chance that over time, at some point, there's going to be another one of these, right? I don't know when, I don't know even if, but if it happens, I want to be insanely prepared. And the last thing I want to do is be short already and not feel like I can add or feel like I'm giving away gains. Because remember, on this short where I did cover, I was short from I think 6, maybe 5 average. And so it would feel really silly to still be short from that average, watch it go from 1 to nearly 4, and not feel I can add because I'm still short from 6, and now it's practically getting there. It's I would be more in a state of fear than in a state of aggression. And so, I'm really happy I covered because lo and behold, it did that, right? It had a huge move from, 1 to mid ones and then gapped up to 3, gapped up to 2 and ran to 3. And then it gave you a bigger gap. I know it only opened up at 420, but it gave you a gift of a gap up. I think it touched 5, right? If I remember correctly. Can we even see it? No, we have to go back I got to keep checking the dates if it's a month back. Now we're loading up here. Hold on, guys. Here we go. Right, this is December. And actually, we talked about this trade. I think we already did in the December recap, so maybe I'm just repeating myself. But I want to just show you the gist of it real quick, because what happened after is what gave me a lot of conviction to take the next swing short, right? Touch 5. So this was the trade that I made 100K on the last day of the year, which was really, really cool. But what was better is what happened next. And again, we'll have to do I think it's the second. So it started bouncing the very next day because it got so clobbered. It gapped up and then actually had a much bigger bounce than I expected. I remember actually being a little bit early on some of my size. I had like a 280s average, maybe high 2s, getting short in this morning action. And by the time it went to late day, $1 a share against me, I was like, wow, I'm a little bit early. Thankfully, it was just a starter. I started in with the idea that hey, this could bounce higher than I expect. Didn't really think it could, but if it does, I'm going to put my risk on the all-time highs or at least the opening highs of 450. And then once it fails, I can add to my short and let this thing fade. And that's exactly what it did. So I'm happy how I traded it in terms of that trade plan. But I certainly was a little bit too early on the sizing of just the starter, because once I did the actual math of stopping out at 450, which you think, God, duck, why didn't you do that before? I realized hey, I can't overextend myself on the front side of this bounce. Otherwise, you're going to take a bigger loser than I really want. And so finally, when it died, that's when I felt much more comfortable. And then I don't think I ever added as much as just the early positioning of it all didn't sit well with me. But nonetheless, I still had plenty of size, right? My charts are all over the place. Where is it? We go back enough. It still doesn't show it. I'm screwing up for you guys. But let's show up. That's the exit. This was the entry. So again, started a little bit here, added a little more up here. Took some more size up top, but then cut a little bit of extra because I just realized now I'm finally doing the math as I'm scaling in more seriously. And I'm like, hey, these ads aren't bringing my average up enough to justify the new risk I would risk at the highs. So I cut it a little bit there, downsized just a bit. Same thing here. This one was at Cobra versus Centerpoint. And again, this was the worst part of it. It's I just started in on probably about 30, 40% of my size. But again, by the time we're adding up the other broker and then doing the math, it's oof. I would have loved to have just taken, let's call it 1 arrow instead of 3, roughly, 1/3 of what I actually took. And then I could have saved that for at least, 3, the mid 3s, if not the high 3s. Because again, this high, I know it was scary in the moment, but that actually was the high. Because the very next day it gapped down to mid 3s. And then the day after that, that's when you see this panic now from 3 all the way down to 220-ish, to low 2s, 230s. And then that's the fade that started. And then once it got to 150s on this day, which was that Friday, I believe, I covered it all for a 90K profit. So that's this day on the 10th. So very, very big gain for me. Again, risk reward wise wasn't tremendously great because again, I put a wide stop on the highs to start up here. But again, that was intentional. That was not unintentional. I knew there was a world. I didn't expect it to per se. Like I said, it was kind of caught me off guard that it even bounced into the high 3s to begin with. But I was preparing and open for that possibility. And so I knew the risk on the highs was the best chance I had to let this finally roll over and then get a really sick fade back to where, the run started. So very, very good big cushion to the month there with a 90K profit. Then we go into week 3. This was really cool. But again, this probably was all due to Fannie Mae where I just had 3 back-to-back days of 50K each. If we go into those days, let's see here. First one was, again, another breakout on Fannie Mae. So, like I said, I sold my 50K profit into this day towards 5. It wicked down to the downside. Never rebought it. I did take a small, I believe, loser on this day, the 10th. Because if we go into it, right, there's now a new breakout level of this is 525. It did try to break out over it, but then was actually quite choppy this day if we just go into it. Let's show you here. And to be honest and to be fair, right, if this new 2025, I didn't have huge expectations that it was going to be that strong, but again, it already had its first huge breakout. And so to technically break out only 2 or 3 days later, more times than not, that's not going to lead to a similar move, right? It's going to become a little different. So I wasn't expecting this huge move right away, but I also wasn't expecting the breakout to technically fail. And so, and by fail, I mean not hold above the breakout strongly. And so once we kind of pulled back midday like this, especially below 520, we're at double bottom in the morning here, I said, no, this isn't it. Let's just sell, take a small loss, and recoup. So I lost like 3K or so, very, very small, which was great. But then again, it does come back, and the next day it gaps up over the breakout level. In fact, we actually slightly gap up in the morning spike over the previous day's high. So now instead of the breakout being 525, you could kind of argue it's now 540, but again, that's not really a breakout. That's just a continuation of the next day and having the first day of the real breakout be more of a shakeout. And so that's when I realized, hey, this still is strong. This is still going up. It just might not be at the pace that I was used to. But again, the fundamental thesis, the swing idea, the daily chart, everything about it was like, hey, there's still a bullish reason to be long. I just need to adjust my expectations and adjust my trade plan. So instead of feeling like I needed to stay exactly in for the breakout level, I decided, hey, we're going to rebuy this at like 540. We're going to risk down to $5, or at least this low of like 506, right? And no matter how long it takes, we're just going to stay long. Okay, it could take another week. It could be a grinding-like action like it happened in November. Right? I was almost expecting like, hey, it might give us something like this where I have to hold for at least a day or two or even 3 for the run to really start to get going. And so you do kind of have that. You have 2 small days where, again, I stopped out for 3K loss here, rebought on the 13th, and then I got rewarded that the very next day was the huge speed up. And so if we go into it, all right, let's go back to the intradaily. The speed up happened just much quicker than I realized. I mean, before you know it, within an hour in, or not an hour in, I guess almost 2 or 2.5 hours in, this looks like a parabolic to me. I mean, I was all out at this point by, if we just look at the trades, again, let's get rid of my covers there on the 150s. So yeah, this is me buying, right, when it gapped up to 540 over the previous day's highs. And then by the speed up, I mean, I started selling some at 6. Whoops, let's go here. All right, I started selling some at 6, some at like 6:30, because again, if you go back, sorry to keep going back and forth between the daily and the intraday, but if you go to like a 10-year chart, we gotta go further. We gotta go 20-year. Can't believe it's been around this long. But the all-time high of this being on the OTC market, okay, there we go. It's always topped out. Like this top was at 4 low 4s. This one is right at 5. This one's at 550. This height right here is like 636, 635. And so you could argue like this was a massive multi, 5 to 10 year breakout. And so when it got there and when it went there, I started selling some more because I'm like, hey, this is a big level. I kept a small piece left just to see how well and how you can go. And of course, 30 minutes later, I mean, we're going parabolic. And so at that point, I sold the rest, locked in 27K on this breakout long. So again, not as big as the first one, but still a big long trade gain nonetheless. And so, and actually, sorry, I didn't mean to close that out, but we'll pull up this chart here. Once I sold, I then started getting more serious about the parabolic. I said, hey, this is getting pretty overdone pretty quickly. There's a world this can pull back. I was thinking 650, maybe even get ugly down to like mid to low 6s, down more here, below 650. And so I start shorting, and I'm actually pissed. I could have swore I took a screenshot of it, but I didn't. But I wish I had it because you could have seen how bad it was. One, because obviously you notice how the price action, the parabolic did not really take place like it should have, right? This was much stronger than I ever could have imagined. Again, I thought conservatively there could have been a good panic down to 650. But that just didn't happen. In fact, it held very well in the high 6s, actually made a new high, tried it again, and then still tried to make like a double top. And then finally it made this low. And even then, it couldn't even get to 650. And so I wasn't even there for this. I gave this like 1, 2, I think 3 tries about all of this. Only ended up losing, or I ended up losing like 20K or something. So gave back most of that 27K profit from the breakout. And so that was really frustrating because again, I as much as there's a strong fundamental thesis behind this, as much as there was much of buying, you'll seem to notice sure quickly, especially when you go into this red day, like it's still an OTC. There's still a great amount of panic that can happen when you get that momentum to shift. And I thought that was going to happen on this parabolic. It didn't, so it led to a slightly bigger loss than I wanted to after giving it 3 tries. However, the overall gain, because my broker at the time, or not at the time, Cobra, will connect trades when I take a long and a short. Obviously, I was down 20K on the short, but then I decided, I looked at how just insanely strong this was, consolidating beautifully at 7. I thought to myself, like, hey, I know this is extended, but this looks really good for a gap up, and I'm going to take it long overnight again. I just am, right? I've seen it many, many times. Again, when you look at a run-up like this, I've seen too many OTCs where when they're this kind of strong, when there's this level of strength, your chances of a gap up are pretty damn high. And so I actually then took it long at like $7 right into the close here, looking for a gap up, and that's exactly what we did. Or that's exactly what happened. So let me just show you. Yeah, like right these last 15, 20 minutes here, got long. And these are the sells, right? So I'm very annoyed. I could have swore I took a picture of the parabolic and then the buy at the end. But then these are the sells of me selling long. And so did I make my all losses back? No, I ended up losing like 3K total between the parabolic short and the long. So call it losing 20K, making 17K or something along those lines. But just wanted to share that because unfortunately it is my trades are literally combined, but it's kind of 2 trades in one there, unfortunately. But anyways, that's the sell on the long side. And then once this really died, I thought to myself, okay, now we're very similar to what I thought the parabolic would offer. Is like, if once you get momentum to shift, it doesn't matter how strong the fundamental thesis, the underlying stock, where it's going to be in 6, 12 months from now, whatever. You get enough longs who are over their head or in underwater, you get a panic. And so I was then starting to short this for a first red day. At first, it was a little bit choppy, right? If we just go into zoom in here, this move down to red green actually held really well and then bounced. And so there was a short period where I was like, hey, there's a chance this is stronger than I think and can recover and make it back to highs. But again, I'm sticking to the plan. I'm risking the highs. I'm short from at this point like a 5 or like a 730, 720 average at worst. Risking 775. It's about 50 cents of risk. Then it pulls for real. So I do get short some more on the red green move, the second red green move. Cover a little bit into this first pull, add it back into this bounce. Perfect kind of fit. I know there's these wicks to the top side. It doesn't really show it here, which is more accurate, but it clearly stuffs and holds, the red-green level almost perfectly, right? There's a few wicks over it, but all in all, the ask stays pretty heavy. And then the real secondary panic, or I guess the third panic, but the real red day panic, I should say, reality sets in that like, hey, this is going to have a red day. And so then I started covering most of my size into the 650 and a below mark. Ultimately ended up making about 45K on the trade. And again, this is one of those trades I was talking about in the beginning of the video where it's like, I wasn't taking massive, insane A+ sizing. I took about an A grade risk for me, which at the time was around 14, 15K. And I made a good 3-to-1 risk reward. And so all of a sudden that turns into a 45K winner, right? What once was a 45K winner for me was massive, say even a couple of years ago, is now starting to look like an average 3-to-1 trade. Which I know is crazy to think, but again, it's simple math. It's like 15 times 3, a 3-to-1 trade. It gives you 45 grand. That's kind of how scalable it can get when I'm starting to risk money that is big. 15K is no joke, but then again, when you start doing the multiplications of like how the risk reward can play out, it opened my eyes to like how big and how scalable trading can get, which again, why I kind of mentioned at the beginning of the video of where, it just gets scalable very quickly. And so this is that this trade was that best realization for me of this month. I was like, holy crap, I just made nearly 50 grand. And it wasn't some incredible breathtaking trade. It was like an A grade trade, which is not that rare. So that was really, really cool. Now, going into the next day, this was also an 18K winner. This was, again, I would call this a second red day. The second red days are not necessarily as high odds as the first. But again, you look at a daily chart, and sure, this first red day was great. We're still up from 2 or 3 in a couple weeks. There's definitely, I went into the day knowing that there's a very very good chance that like, hey, this could go higher, but in the event it shows action, then it won't. Like, there's a pull waiting to happen at least to these 5s, which is exactly what it did. And so we go in there. And I wasn't even early. Like, I wasn't even trying to be predictive or predict it happening. I was very reactive. I said, hey, if this doesn't even go red-green, I'm not going to short. If it goes red-green, then I will just get short. And then if it panics, it does. And if it doesn't, then I stop out. And that's exactly what it did, right? Out the open, had a small gap up. from like 620 to 630, tried to spike into the 640s, which ended up being quite the resistance level, mid to late day yesterday. So couldn't make anything happen there, couldn't get enough strength, and then the panic actually started, got short really close to like 620, and then again, just covered into the mid fives, even the slightly low fives, made another 18 grand, right? Here's that, let's get rid of that first red day. All right, Fannie Mae day 2. Right, just waiting to get short red green, small covers early on, and then just cover the rest into the pulls, and 18K from there. So this was more of a 2-to-1, given that I was risking a little bit wider, or wider for how much the range offered today, just because again I would rather be late and right than early and wrong. And again, I think I covered a little bit too much on this first candle, whereas if I held that towards these, it would have been maybe more 3-to-1. But again, risk 9K, made 18. So again, another example, maybe on a smaller scale of like. Even a 2-to-1 trade can result to a really healthy 5-figure gain. So that's that. Next is DJT. So DJT, I had the thesis on this that this was going to run up into the inauguration, very similar to how this ran up into the actual election, or there's the voting election of either Kamala or Trump. Now, obviously, and we can say this in hindsight, it did not run nearly as well. But it did run actually a little bit. And so I longed this a little bit early, and it gave me a pretty crappy entry. I got long on the 6th at around a 36 average. And so for the first 2 days, it pulled back, and I started questioning, I'm like, am I too early? Is my thesis dead wrong? What's going on here? But again, you see this like multi-level hold of, for the past really month, this like 33 level, at worst case, like 3250, very good multi-week support. And so I thought to myself, hey, if we're not going to even break those levels, yes, I'm early. Yes, I don't have a great entry. And maybe I'm too early in general, or it never happens, but like, just play dumb, stick to the risk level. And if it works, it works. If it doesn't, it doesn't. And so lo and behold, into the Monday before the inauguration, I don't know why. Maybe just people woke up to the thesis exactly a week before, but that's when the run started. That's when we really started to get going. That's when I did add actually shares, and we can pull it up here. So here's the first early on the 6th, right? Just randomly buying consolidation, thought it was holding pretty well, but again, the next 2 days it sells off. Here's that big day where once we've proven like, hey, we're working here, holds this 38 level really, really well. I then add some shares. I think I might bring my average up to like 37-ish. Pretty much was going to risk like this low for break even. And then we just keep going, right? We make our highs all the way to 43. We close at like the mid 42s. And frankly, I thought, okay, great. This is the move I was looking for. And my goal was to sell like 45, 50-ish. Right? If we could just sell in this range somewhere back up into this resistance level, I would take it, no questions asked, wouldn't even hold through or up till the inauguration. I was just going to take it. Unfortunately, it then led to a really choppy next 4 days. It just could not get going. It slightly broke out here on this day, but I actually did get stopped out before I even can make that. And of course, the inauguration then took place. And even then, for not running up as much as I thought it could, it was still a sell the news event, and now is back down at 30. So, how did I get stopped out? I eventually started playing the game of like, hey, I'm just going to risk every previous day's low. And so, unfortunately, this day when it pulled all the way back down to 38, I was like, hey, I'm kind of giving a lot of gains back. But again, I had a little conviction that it was going to keep going. And so after this day, I moved my risk to 38. After this day, I moved my risk level to 39 or 39.5. And after this day, I moved my risk level to 40. However, this choppy ticker, stopped me out literally in after hours. Quite the insane move. I don't know. I couldn't tell you why. I thought there was negative news that came out. But again, pulled back into the close, which wasn't the healthiest. But again, this has been many, many big pulls all throughout this period. So this wasn't anything huge or concerning per se. But then after hours, it just totally rug pulled everybody. And so I did stop out under 40, only for it to come back and then still break out and still get back over 40 through the next day. So that was frustrating. But again, even if I was still long, I would still have my risk on 40. And again, by late day, it stopped me out anyways. It had a huge fake out, went back below 40. And then the next day, once the inauguration took place, it really sold off back down to pretty much my entry of 36, 37. So just happy that I was trying to be patient and give itself as much time as I possibly could. But it was a trade that technically didn't work, but because I was so early, because I did have that early 36, 37 entry, I still locked in 18K or 17K and change, selling it at $40, for a $3 to $4 a share gain. So that was really, really cool. not every day you can have a trade like that didn't work, but still make 5 figures, right? So that was cool. That was awesome. Next, also Fannie Mae. Again, this is the last Fannie Mae trade, guys. So if you're getting annoyed by Fannie Mae, don't worry. This is the last of it. Let's go back to the daily. So after that second red day, it had a massive green day, kind of day bounce back to the highs, or roughly around 7. I did not partake in this move. I frankly didn't think it was going to be that strong. It was, much, much stronger. I thought, by the morning, if we go back to the intraday, it had a morning move to the mid 5s, I think, right? Yeah, right here. It had this kind of choppy move to 6, and I thought, okay, that's probably it. It's probably going to just chop around, not do much. And lo and behold, midday, which is rare, it had this really impressive move to above 650, and then even to the close, had this magnet towards 7. So going into the next day, I thought to myself, I really wasn't all that bearish. I just thought this bounce was so strong, hey, this might just keep going, right? We just saw how that breakout at 525, like we talked about, only needed a couple days to keep going. Now, eventually, at some point, the breakouts and the momentum stops, but because this had such a strong bounce right to 7, who's to say this couldn't have gapped up and run to 750, and lo and behold, we're right back to the highs. So I didn't go into today really having a strong bias for the short side. What changed my mind, though, is that for those who are watching the level 2 and the time and sales here, there was a massive seller, a massive hidden seller at either 7:10 or 7:11. Because you'll notice here these 5 or 6 minutes. I know it wicked over a little bit, but there was a seller there that was only showing 100 shares. And like you said, you look at the volume. I mean, there were tens of thousands of hundreds of thousands, arguably, shares that were going through at this range and this price level, and that seller was just not budging at all. And so it made me realize, hey, there's a big seller here, and although that doesn't necessarily guarantee it's going to sell off, it certainly gives me a very strong level to use and have some conviction on. And so I decided once it started cracking, I started to get short just with the idea, hey, this level is just really a solid level to use and to trust. Let's just find out how well it panics. And it did it way beyond my expectations. When this was down within 4 or 5 candles or 4 or 5 minutes down to almost $1 a share off the highs here, that was not on my bingo card. I did not expect that to happen. I thought it was being much more choppy. I thought maybe best case we'd get 650 where this consolidation was, but we went much lower, much quicker. So ultimately locked in. And there's my sells on DJT. Seem to keep forgetting that. But yeah, like I said, got short. Actually, I think I started in here because it looked like it was green. But again, this. I remember correctly. This was less than 20% of my size, so very, very small. But yeah, added the real size on this move and then covered it all towards the lows and just, again, 21 grand. Was not expecting that. About 2.5, 3 to 1 trade. Again, just another trade that you kind of sometimes go in with no expectations. Just let the price action show you what happens, and it blew my expectations away. Because if you know me long enough, my bounce shorts are not necessarily the strongest. Again, I know Fannie Mae was a good one, or not Fannie Mae, FFIE was a good one because it was more of a swing. But in general, those daily bounce shorts are not a strong suit of mine. So it was cool to see, cool to have happened. So that's the last of Fannie Mae. So we're done talking about that one. ASST was probably one of the more frustrating gap and craps of the month because, as you can see here, it looks like in gap and crap. It did gap and crap, but I stopped out. I got short a little bit too early. Again, we'll go into the daily or intradaily. Let me remind myself where the hell I was short from. Yeah, just got caught. Probably me and a lot of other short sellers on what was a first pull, chopped around, couldn't get over view up. You see the wicks that kind of couldn't stay over view up. Then a final real pull to new low a day, only to then actually fake everyone out, squeeze everyone out. I stop out and then still faded back actually to new low a day just slightly. So the only way to play this was have to completely ignore this sell-off, which would have been very hard to do based on how I trade them, and then get short somewhere up here to actually have the range to the downside be worth it. Because in the event, let's say I got short anywhere in here and actually was able to survive the squeeze, again, the lows were a very healthy red candle for a gap and crap idea, but again, getting short anywhere here wouldn't have led to nearly as much of a range as it would have if you got short up from, let's say double the range higher. So a little bit knowing there, lost around 7,800, just a little bit under 8K there. What's this one? Oh, NNE is the next one. This was a red day attempt that I actually lost money on this day, the 24th. So good multi-day run-up. Again, you know my style. This is like 1, 2, 3, 4, 3 or 4. Really 3 big days and 1 small day. But really, these were also green days that are really, really teeny. But, going from 25, let's call it, to 44. Not the most extended percent-wise, but I also know this was a larger market cap stock. And so I was willing to give it a shot. But again, when you've seen enough or have had enough experience like I do, beyond just grading it and giving it, kind of looking at all the indicators and grading how I think good it was, I already kind of went into this day knowing like, hey, if it works out well, cool, but like, don't expect much of this because there's a world where there's this, just the way this trades, the way this is more of a legit company, it wasn't going to, I wasn't going to get my hopes up, let's put it that way. And I wasn't going to get that shocked if it was a total pain in the ass. And that's kind of what happened, right? If we go into the daily or the intraday, I will admit on my part, I got a little bit, not eager, but I don't love my entries, especially when, I don't remember exactly where they were, but when you look at the chart, you'll know exactly what I mean. Yeah, here we go. Shorting the lows, ours is going red, so I kind of trust it to some degree, but just shorting the dead lows, right? Even here, practically covering the dead top. Even here, covering the dead top of the lower high. Yes, it did come back, but I gave 2 attempts each, about 4K each, love a loser. Lost 8K in total. And by the fact of how choppy this was, that was the hopes up that I wasn't going to give, right? And so when this did die and actually go into a low a day, of course I was frustrated. I was like, watch this now fade without me. But I didn't have the FOMO to get back in because I also knew just because it's now looking like it's going to work doesn't mean it's going to work, right? It's still the same characteristic and the same ticker it had just 20 minutes ago. And so I didn't have actually FOMO to chase this or to get back short again. And it's one of those counterintuitive things, like once I let go and didn't feel attached, like I have to be a part of it or I have to make my money back, and I just trusted my gut, it saved me a whole other loser, right? Probably another 8K in losses. I just ignored it, and what do you know, just a straight V recovery back, and before you know it, we're breaking highs, and then by the end of the day, we're a whole, $5 a share higher from red green. So very, very annoying ticker. One that the way it trades and the way it moves, there was really no way I was ever going to profit on it. Next day, huge gap down. Didn't even give you a chance to try to reattempt a second day short. So it is what it is. It was really the only red day loss, a red day attempt of a short that I had that I would end up being a loser in, and the rest were pretty much the gap and craps, like I mentioned. Then to close on a gap and crap, this was probably the best gap and crap short I had of OCEA. They didn't have an offering, and I actually never looked into it if they had dilution or not. But this is just one of those ones where you kind of just trust it. And I mean, my God, did it get obliterated, right? I mean, most won't ever go to red green, let alone significantly red. And again, this went from 34 down to the 20s, like well over 20% red in the day. So that's a very rare occurrence. But again, you just you never know which ones are going to be that. And so this ended up being a 10K winner on the gap and crap side. So that was really, really cool. And I think that's the trade here. Yeah. And I think this was the 29th, right? This was a Wednesday, right? Yeah, Wednesday. I remember specifically saying on Good Morning NASDAQ, like someone saw me we did this trade live. Someone saw me get short here, and they were like, I'm going to paraphrase it, and I agreed with them. It was like, Kyle, this entry is terrible. Like, is your risk reward barely 1-to-1? And I go, yes. Yeah, yes, it is. And unfortunately, the way I approach them is not necessarily the most kindest risk reward wise. Certainly not entry. Sometimes it looks terrible that I'm chasing, like clearly getting short after this momentum. Sometimes will majorly bite me in the ass. But there's other times, again, we get kind of random, where OCEA, I'm getting short, and then by second half of the day, it's like, holy crap, like, and a hindsight bias would have said, man, I would have loved to get short anywhere up here. I'm just kind of closing my eyes and trusting the process of like, I'm just going to get short anyway and find out, right? So that's what happened here. That was really cool to see. And that's that. So really, like I said, the last 2 weeks didn't really much happen. I think people would agree around sometime. It was either Friday or it was Monday. But there was a shift, right? If you know what I'm talking about, or you've been trading long, if you know what I mean, when you see the markets kind of change, maybe some fear or some news or some sentiment changes, but like things shift, and my setups weren't popping nearly as much as they should have, or if they did, they just didn't work out as well. And so really, call this a little buffer, but then really week 2 and week 3 were the huge contributors to that, ultimately leading to nearly a $400,000 month. And again, a huge win rate. That was a big point, like I mentioned earlier. And now we're on to February. Pretty good start already. 50K to start the month. Lost a little bit today. So we'll see. again, like I said, I'm a fan of seasonality, but don't necessarily have to take it to the bank. But January and February are typically one of my better months of the year, especially, prior to November last year being my biggest month ever. The standing streak before that was February of $440,000 in 2021. So still now my second best month of my career. So no expectations. I could care less what I actually get and end in February, but it wouldn't shock me if the slower period that we've seen, the shift we've seen this 2 weeks, maybe fades away and we get another really strong, wind of opportunities, so to speak. So we'll see. Again, always take it by day by day, always react, not predict. So anyways, yeah, that's that, guys. I feel like I had something else to say, but I don't. I just, like I said, I'm start the video and end the video. I'm just sizing up more, taking the same risk reward trades, the same processes, and it's just resulting to bigger gains. And so I will continue to do that throughout the year, and I think this year is going to reward me handsomely for doing that. Again, we're very early on, but I feel pretty good about it. So, and again, if you watch that video or you've heard me talk about this, if I have a good month or if I have followed my risk management correctly, every month I'm going to try to bump it up. So already in February, I have already bumped up my risk level across the board for A+, B, and C grade setups. So we're first 2 days of the month, we're already starting off that well. And yeah, we'll continue to do that. And I can babble on all day now, but the video is going to be almost an hour. So anyways, thanks so much, guys. Make sure to like and subscribe, and I will see you guys for the February recap. Also, this will be the last time you see this office. I know it looks the same most of the time. It's just a blank wall, but like I'm moving. So this will be the last kind of video in this lovely place I've lived in the last almost 4 years now. So it's been fun, but life happens, change happens, and so I will be moving on, sadly. So you'll probably see me in the next video with a different background. So anyways, guys, thanks so much. I will see you guys next time, and have a great rest of your month. Bye.